Mortgage process. This is the topic we're going to discuss today. I will take you from pre-approval to closing in 6 steps. I'm Robert Niazov, your trusted mortgage source. Please hit that subscribe button and let's go. Step number one in the mortgage process is to get pre-approved. What does it mean? Pre-approval is essentially your lender will give you an idea of what kind of mortgage you can qualify, whether it's going to be 200,000, 300,000, $1,000,000. They will take your documents, your income, your financial documents like bank statements. They will check your credit report and they will tell you, okay, you can qualify for approximately this amount. And I'm saying approximately because parameters change. You see, your mortgage payment is a function of an interest rate, and that can change. Your interest rate is a function of a credit score that can also, change during the time when you get pre-approved and actually when you find the house. So again, first step number one that I just described is mortgage pre-approval, where the lender will tell you what kind of loan where you can qualify for. This brings me to step number two. Now you can go and find your home. Now you can actually search for the house that you or an apartment, whatever you're looking for. You work with a realtor, you find it on your own online. But now with the pre-approval and how the steps number one and two connected is, you see for any seasoned realtor or even for many sellers, they will not let you even see the house or consider you seriously until you have that pre-approval from a mortgage professional. But once they see, they'll say, well, great, okay, this person can qualify for a mortgage. Let's consider him as a potential buyer. Now, why wouldn't they do it without that pre-approval? Is very simple, because if they show a house, you make a deal, and the mortgage fails, God forbid, then everybody wasted time. Step number three. Now, when you found the house, then you negotiated the price with your realtor. Once the contract is in place, you sign it, the seller signs it. Now you actually need to get the loan. Now you need to get the mortgage. Now the mortgage application process starts. So your lender will use a lot of documents that you submitted in part one, in the step one, where I was talking about the mortgage pre-approval. But that may not be enough. Things like copy of your passport, maybe a social security card, your driver's license, letters of explanation. That all comes in this step. In addition to this, some documents may need a refreshment, like your pay stubs or bank statements. In mortgages, documents are not forever. In other words, you really cannot use a bank statement from a year ago. It has to be a fresh bank statement. So we submit an application for approval. Now, whoever is going to grant you that mortgage will look at the documents to determine if there is something changed with the pre-approval process till now. In other words, they dig deeper into your financial situation. Step number four. Now the interesting part comes. Mortgage underwriting. Lender's underwriter, the specialist who knows and seasoned in understanding the risk of each borrower, will look deeply into your documents. They will see if there is any properties you own, or maybe you co-sign for someone that, the pre-approval process is detailed, but not as detailed as underwriting. So underwriting is a more detailed process, and they will look based on the bank standard. At the end of this process, if you satisfy, they will give you something called a commitment or an approval letter. During this process, by the way, the appraisal will be done also in collaboration with your realtor. I'll give you an example. Let's say you're buying a house for 500,000, but the specialist comes in and says, nope, I think this house is only worth 420,000. Now the bank will go with a lower number, and they will start calculating and giving you the mortgage based on this number. It's in bank's interest to get the appraisal done. And that is also part of this mortgage underwriting process in our step four. And one other thing in this process is the title. The bank will request a title. So what is the title? I'll quickly explain. It's almost like you can think of it as a credit history, but for the house, for the property. Were there any problems with the house? Was anybody suing the existing seller? How did it get resolved? Number five. Now, this is a preparation for closing. They Once the underwriter in step 4 gives you that approval letter, there are normally some conditions that we need to satisfy. So in this step, we satisfy conditions together. You work closely with the processor at your mortgage broker's office to clear out some necessary things. It could be some explanation letters and your intention. Where did you get the money? If you got any gifts, the explanation for gifts. So that is all done in the step 5, in addition to preparation for closing. Now, when this is all done, we get what we call clearance from the bank, meaning there's no more conditions. Now we can prepare for closing. You prepare the rest of your down payment, and the closing is set. Step number 6, closing time. Parties, seller, buyer, real estate agents, attorneys, title agents schedule a time to meet, usually in one room. You as a buyer sign a lot of documents, you bring checks. At the end of the closing, you give checks to the seller, and you get the house and the keys. If it's a virtual closing, the process is similar. You also sign a lot of documents. The seller signs documents, and the documents are usually shipped. Ladies and gentlemen, I hope this information was helpful. Please, I encourage you to comment, ask us more questions. Till next time, God bless you all. We'll see you soon.